And my first guest joins me in studio, Mr. Douglas Talent. He's the CEO of a company called Friendly Energy Exploration. Their stock symbol's FEGR. Doug, welcome to the program.
Thank you. Good to have you here.
Well, Friendly Energy Exploration, I just love the name. I can congratulate you on that. But you describe yourself as a company engaged in acquisition, exploration, and development of oil and gas properties in primarily Texas and Oklahoma. Give us a general overview of what you do.
Well, we've been lucky enough to find a niche that we've taken advantage of. We found some wells that have been shut in Texas. Most of these were closed in the early 90s when George Bush Sr. was president, and the oil was frozen at $17 a barrel. At that time, they couldn't get it out of the ground at that price, so they just kind of capped everything. We've been able to go in and acquire these leases in central Texas. We have a nice footprint there. And start reopening these wells. The fields have been dormant for, sometimes up to 15 years, and they're really energized. So there's a lot of gas pressure in those fields, and we're having great success with it right now.
You know, one of the oldest adages in the oil and gas business is to look for it where it's already been found, and this is exactly what you folks are doing, right?
Absolutely. And the nice thing is we have over 2,000 acres already under contract. We've got another 3,500 acres that we should have under contract by June. That's over 5,000 acres. That's a big footprint, and there's plenty of room for infill drilling. So that's important to us.
Now, a little bit more than a month ago, you achieved a significant milestone for the company. You began producing actual revenue. You started selling oil that you had produced, which for a small company, beginning that's going from exploration to production, that must have been a great feeling for the company.
Not only was it a great feeling and exciting, but it was really hard to get done because it just so happens that during that period we had our oil ready to sell. It rained for 3 weeks in a row in Texas. We couldn't get the trucks in to pick up the oil.
Wow.
So finally, when it dried up enough, we were able to start selling our first loads of oil, and it's turned out nicely for us.
Yeah, it's been really interesting doing some research on your company prior to this interview, and I've noticed in 2010 you've made a lot of progress. How many wells do you have in production now, and what can we expect, say, in the next 3-4 months?
Today we have 14 gas wells and 14 oil wells, all in operation. By the end of 2010, we'll have over 60 wells in operation. So we're going to be busy this year.
That sounds like it. Now, of course, oil prices have come down from their particularly insane levels from a couple of years ago, but we've been kind of hovering around $80 per barrel, fairly consistent, at least for most of this year. Do you folks have a strike price at which you know that you can extract and still be profitable?
That's kind of a hard question, I think. We do know that it takes us at least $26 a barrel to get it out of the ground.
Okay.
And then, barring any hiccups, and there's always hiccups in these deals, so I would say probably around $30 a barrel. We're good at that.
The company is Friendly Energy Exploration. Their stock symbol's FEGR. If you'd like more information, you can call us toll-free from anywhere in the world, 888-259-4449, to get free information in the mail. Now, Doug, I noticed that your company is going to be presenting and exhibiting next week in Las Vegas at the Accredited Members Conference. We're going to be there as well, so we'll see you there. What kind of message are you bringing to the accredited investors there?
Well, we're terribly undervalued at this point. Our stock should be selling higher. We want to show people what we're doing. We're now in production. That's very important to us. We're very low risk with high potential. That's very important. And we think we've got a good product for people. So we're excited about it.
Well, we look forward to talking to you there as well, and I know I'll be sitting in on your presentation. Now, let's go back to one of your projects, specifically the Panther Creek project.
Okay.
You're estimating, according to your website, there might be as many as 165,000 barrels of oil there. Can you give us some more information?
Yeah, this is a field that was prolific back in the 80s, and it got shut in because the oil prices were down. We've now opened up 6 wells on that property, and the gas pressure is actually so high we had to have one of our pump jacks tied to the ground because it was actually lifting it up off the ground. It was wild to watch. But we're doing a good job with Panther Creek. We've got another 3 wells to bring on there, and we're looking for good revenue out of that particular lease.
Yeah, the oil business always says kind of a soft spot in my heart. It was actually my first job out of college.
Really?
I was a land lease agent for a seismic company. Now, acquisition is a big part of your business plan, and probably the biggest.
Yeah.
I'm just kind of curious, what is your criteria when you're looking at a potential acquisition target?
Well, the first thing we do is our due diligence. Luckily, in the United States, when there's a well drilled, there's a record of what's happened with it. So we do our due diligence. We go check the logs, what happened, how many barrels have already come out, what is the projection, is there a reserve report, those type things. And after we do that analysis, we sit down and look at it, and if it's viable, we go for it. I think with the way things are going in the Middle East, there's going to be a hike in the oil prices. And I think to have a land bank is very important, so we're going to try to acquire as big a footprint as we can in Central Texas.
You know, I think you're absolutely right. I mean, we're seeing oil hovering right now, as we mentioned earlier, at about $80 a barrel. I don't think anybody's really believing it's going to stay there very long.
I think we're getting $100 oil for sure.
You think by the end of the year?
I do.
Wow. Now, let's go back to the whole acquisition process, because as you said, in the early 90s, many wells all over in oil country were capped and shut down for various reasons, largely because of low oil prices, others because technology just wasn't at the point yet to get the oil out of the ground. How competitive is this space now? When you're looking and you're getting involved in a potential acquisition target, are you finding yourselves getting into bidding wars with other companies?
Not really, as strange as that may seem, not really, because what we've done is we've found a niche where the big companies don't want to do this kind of business.
Okay.
It's too small for them.
Okay.
But in reality, for a small company, it's a huge deal, because you're talking about hundreds of thousands of dollars, and a lot of smaller companies just don't have that to spend on those kind of things. So we've been lucky. I won't deny that. We've got 5 good leases. We're looking at another 4 or 5 leases. So we're pretty excited about it. But as far as competition, we haven't run anybody in the field. I mean, you got to want to do this, and you got to be prepared for it. We have our own rigs now. We have our own rig crew. We have our own operator license in Texas, which took us a while to get. The screening process and that, and you have to have a cash bond of $50,000, that kind of thing. And a lot of people don't have that. So we're lucky to be our own operator, have our own rigs, and have our own crews, and really be in control of everything we do.
Well, with everything that's been going on the last couple of years with the economic downturn, in business, it's basically been a situation where it's taken an hour to make minute rice.
Yeah, for sure. That's exactly right.
But I think a lot of people are now feeling that things are beginning to turn around. So from your perspective, with, at $80 a barrel right now, possibly $100 a barrel by the end of the year, are you thinking this is probably a really good time to be in this industry?
We think it is. We're going to get our volume up to 300 barrels a day. And at that point, the cash flow is extreme. We're going to be able to do everything we need to do with those kind of numbers, and we think it's an excellent time. And the sad thing is that I don't hope there's any trouble in the Middle East. I mean, no one wants that. But the upside of that is, if that happens, oil prices are going to go through the roof again. So we feel like we're positioned real nicely right now.
Well, Doug, why is this a good time right now for people watching to take a closer look at your company?
Well, we're undervalued. I really believe that, and it's a good, strong investment for people. And we're transparent. Everything we do is listed with the SEC. We do all of the filings. Everything is out in the open, and we're a good small company, and we're going to become a junior oil company. We're going to grow rapidly. Next year, we hope to have over 100 wells pumping. So we have a good growth spurt here.
Again, the stock symbol's FEGR, Friendly Energy Exploration. Doug, we're initiating coverage of the company this week. We're following you very closely over the next 3 months. We're going to see you in Vegas next week.
Absolutely.
Looking forward to more updates of your progress. Thanks for joining us.
My pleasure, sir.
Take care.